Hey Patricia. day after Thanksgiving, and everybody is here. And listen, if my everybody is not your everybody, then you better get your everybody up in here. So click that plus sign down at the bottom of the screen and start inviting people in, because we have some fabulous information for you today. So we've got Jared here with us today, and he's going to be leading out. Jared, what do you have to say to us today this morning?
First off, happy holidays, everybody. Hope you had a great time with your family yesterday. And I'm excited to be with this family today as well, because you are in for a treat. This is the P.I.L.L Method Club and Clubhouse, and this is the P.I.L.L Method Company across all the other streaming platforms that you may be watching on. And what we're going to be talking about is how to pay off mortgages in 7 years using the P.I.L.L method. And this is going to give you a different perspective on how to look at interest cost rather than look at interest rate, which is going to save you and your family thousands and thousands and thousands of dollars in lifetime interest cost. And if you are somebody that has a mortgage, has credit card debt, car loans, student loans, and so basically, if you are just like every other person in America, then you want to be in this room. And then if you have other people in America that you know, you should invite every single one of them into this room. So if you're on Facebook, go ahead and share. If you're on YouTube, share. LinkedIn, share. Clubhouse, click that plus sign, et cetera, because we want to get as many people in this room today to really free them up financially and give them a perspective that they never seen before. And I promise you, they're going to thank you for bringing them in on this Black Friday. It's going to be a Black Friday they'll never forget. But yeah, so what we're going to be doing is basically having Don break down examples based off the questions that you have. So if you're in the Clubhouse room, you'll have the opportunity to come on stage, ask questions, and then Don will illustrate it on the screen. And if you're on Clubhouse, we'll direct you on how to get to the simulcast. But what we want to do before we go to the introductions, Don, is to give people in the audience a quick rundown of what the P.I.L.L method is and how it's going to benefit them. And then we'll go through the introductions with Kenyatta, Sean, YC, Kirk, and Valley. And then we're going to get into the content. So, Don, I'm going to pass it over to you. But for those in the room and Clubhouse, make sure you click the greenhouse and follow the club. And also make sure you follow Don. But I'll pass it back to you, Don.
Good morning, everyone. Listen, so that you will know, and for everyone else to know, what P.I.L.L method stands for. It stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. And why is that important? So for 87 years, we have been told how to pay back loans. And for 87 years, we've been paying about 75% more interest than we need to. It is not necessary for you to pay all that interest. It is the interest that you pay to manage the debt that causes long-term debt, not the money you borrow. So folks, if you are stressed about paying back your debt, if you think your debt is hanging on too long, if you think you did it the wrong way, I'm here to tell you this morning, it is not your fault. It is not your fault. I don't care what the gurus say. I don't care what the guys that you've heard on the radio and on TV. I don't care what they say. It's not your fault, because how could it be your fault when we have been miseducated on how debt really works? We're following what is called best practices right now. And if you're following best practices and it's not working for you, then the tendency is to blame the practitioner. We need to find out about the instructions. We need to learn the truth this morning. And this is what the P.I.L.L method is. It's about the truth about how lending actually works, so that you can learn to pay off all of your debt in an average of 7 to 9 years. That's your mortgages, that's your student loans, that's credit cards, that's car loans, that's everything in an average of 7 to 9 years, without refinancing, with using your current budget, and without sacrificing lifestyle. That is the P.I.L.L method in a nutshell. And we use groundbreaking information and education. So we are going to teach disruptive education. We're also going to teach not only disruptive education, but we have disruptive technology as well, folks. That's what we're talking about. So listen, watch what's going on today. Um, Pay attention, and I guarantee you, you're going to leave with something you can use. Jared, back to you.
All right. So for everybody that's in the room, hopefully that gives you a great idea of what you're going to experience today. So you definitely want to stick around. But more importantly, as the moderators go through their quick introductions, I want you to click that plus sign and hit as many people's faces that are online as possible until that red bar comes up on Clubhouse. And then if you're on Facebook or Instagram or LinkedIn or Twitter or Twitch, definitely just click that share and invite everybody into this room, because you want to be able to see they want to be able to see the example I was going to put up on the screen. All right, so we're going to go through some quick 30 to 45-second introductions. I'll start off and kind of set the tone in terms of the pace. So my name is Jared Alberton. I've been in the tech space since 2006. My goal is to get more diversity in tech. So I host a lot of rooms on Clubhouse, and I do content on other social media platforms to help people break into jobs. Helped over 50 plus people break into tech this year. And I'm looking forward to 2022 being even bigger with Twitter Spaces. Feel free to follow me at jarrett10k.com. It's JARRETT10k.com. And you'll find all my social media platforms. Up next, I want to pass it off to Kenyatta, who's going to tell you about herself. She's also going to tell you how you can get on the Clubhouse simulcast if you're in the audience. Kenyatta, over to you.
Thank you. Good morning, good people. I'm Kenyatta. You can find me at kenyatta10k.com. And I am a real estate broker in the state of Illinois, as well as a financial service provider, connecting you with the funding that you need for your real estate projects, as well as your business purpose loans. Here, I am helping to facilitate the room in the flow, and I'm happy to do so. I will ask that you go ahead to the P.I.L.L method digital card that's above us. And if you're listening, go to ice10k.com. That's ice10k.com. And then click that link that's over to your right, the second button down that says Clubhouse Simulcast. There we're streaming on YouTube, Facebook, Facebook times two, actually, LinkedIn, Twitter, Twitch, and because we have the YCEO here also on Wisdom, go ahead and tap in wherever you can, and please share this room, because I know something wonderful is going to happen this Black Friday. Good morning. Sean.
I'll go ahead and tap in. The brother's probably getting the kiddos together. I'm Tiffany, the YCEO. I am so excited to be here. I've been in the financial sector now over 20 years. I've also served in the nonprofit sector for over 25. And I've also formed the YCEO network that you might be streaming on here today. I'm so excited. We are here to help you get to the financial freedom that you deserve, and we want you to get ahead. So we want you to know that we believe everyone has the potential to be great, but sometimes we need help. And that's why we're here. Feel free to tap in and ask any questions in the chat wherever you are streaming from. I'm Tiffany. Bye.
Really quick, guys. First off, happy Thanksgiving to those who enjoyed yesterday. Today is Black Friday. Today for making extraordinary things happen. And Don, we're
Yes,
looking
sir.
forward to another great presentation. I'll be more in the background. Also, myself and Tiffany is here to support in any which way we can. If you can't get in touch with me, the YC is right next to me that has full authority to make all decisions that I can. And we're just here to support. With that said, over to you, Kirk.
Wait a second. Sean said he's going to try to stay in the background.
We've heard that before.
Do we listen, man? Do everybody in the listen? Even all you new people in here, even the new people know that Sean can't stay in the background. I don't know what he's talking about. So let's go on. Go ahead, Kurt.
Hey, man, I have to try something.
Hey, Don, you gotta remember,
Yes.
so
It's good to be here.
or he's Superman, but now
Ouch.
he's just
Exactly.
forget what
Be
Superman's
careful.
real name is.
Be
but,
careful. 10K might pop in. 10K might pop in.
All right. Listen, we've got our executive producer on up next. Come on, Kirk. Talk to us this morning.
Hey, good morning, good morning, good morning. And those that are on Clubhouse, those that are on Facebook, YouTube, LinkedIn, Twitter, all of the places that we are simulcasting to right now. Just want to say good morning. Happy Black Friday to you. Hope your Thanksgiving was great. I want you to kind of take a look at what's happening on screen right now, or if you're in Clubhouse, of course, it's a visual feast for you. Sorry, an audio feast for you. But one of the things that makes this possible is, of course, live production and live streaming, and we are excited to be able to bring that service to you. My name is Kirk Nugent, also known as the Geek Speaker Preacher, and we believe I actually have the shirt on today because I was just doing a live stream. Just literally came from another live stream. We believe that your live stream is your digital storefront, and you can build your brand, your influence, your authority with live video. No greater way for people to see you exhibit your greatness than for them to experience it live. And so we want to help you guys do that. That's exactly what we're here for. Composition LLC is the company. You can find me at kirkrnugent.live/10K. kirkrnugent.live/10K. Kirk Nugent, Composition LLC. Happy to be here.
Hello guys, hi. What's up? I am new here. Can you accept me? My name is
Hey, all right. So up next we got Valley.
How did that happen?
Good morning. That was a great morning to get started. My name is Valley Sears Jones, and I am here in the Dallas market. I am a licensed agent, real estate agent. I love helping buyers fire their landlord, become the lord of their own land. We also work with sellers and investors to liquidate assets and acquire others. We have a financial literacy program that we only primarily work with individuals to help them get into home ownership. I love the P.I.L.L method, and that is why I'm here to support the room. Thanks for having me.
Awesome. Thank you for being here, Valley. Up next we got the Credit Goddess.
Hey everyone. Happy holidays. My name is Rosalora Lewis. I'm also known as Credit Goddess. Money talks, but credit holds a conversation. I'm a credit score improvement strategist, business credit consultant, and a business broker at nav.com. I'm excited to be here as well, as always, with my family. Any one of you guys have any questions, you know I'm here. You guys can also tap in with me at yourcreditgoddess.com and at IG and Facebook at Your Credit Goddess. Thank you for having me.
All right, all right. So if you're in the audience and you have a question about your mortgage, refinance, student loans, credit card debt, or if you're just curious about the P.I.L.L method based off the description in the club or what Don said before, and you want some clarifying answers, feel free to raise your hand. There are no bad questions. Again, there are no bad questions. Every question that's asked can benefit the audience with the answer that Don gives. And Don will be giving this live on StreamYard. So click the link above or click ice10k.com. If you're not in the Clubhouse room, go to Clubhouse Simulcast and choose the option that makes sense for you. But actually, what I want you to do is when you go to Clubhouse Simulcast, click on every single platform and make sure you give Don a follow on those platforms. Therefore, the next time you pop into LinkedIn or you pop into Facebook or you pop into YouTube, you'll likely see some new content from Don that you don't see on Clubhouse. So definitely make sure you follow him on all platforms, like his post, and share. That's the way you can support Don so that he can support the community. With that being said, if there are no hands raised, Don, let's go ahead and jump into an example, and that'll stoke all the questions for the remaining of the room.
Oh my gosh. Oh my gosh. So listen, I love that. I love that phrase. I learned a new phrase since I've been doing this. It's called like, follow, and share. Like, follow, and share. Folks, you need to start sharing. If you're on live stream right now, if you're on Facebook or whatever, and you want to share this information because we're getting ready to put something on the screen right about now. And so go ahead, Kurt, and let's go ahead and put on the screen what we have now. I'm pulling it up now, and we are starting. Boom. There it is. All right. So what you should be seeing now, because of the way that this is going, I cannot see my other screen. So do we have how to pay off mortgages and other debt in 7 years?
We had it, but now okay, there he goes.
Uh,
It's back and it's bigger.
uh,
Yes, we do.
Excellent, excellent, excellent. So, folks, this is what you want to know. Pill Method International LLC presents how to pay off mortgages in about 7 years, and we want to get into the basics of what Pill Method actually stands for. So, here's what we want you to know as a matter of fact. And if you don't believe this information, just think about your own situation, because that's all we're going to be talking about, your own situation. And remember, the way we think about debt, the way we understand mortgages, the way we understand credit cards, the way we understand all of this keeps us in debt for a very long time. And what I'm trying to tell you is it's not your fault. It is because we've been miseducated. 90% of the people you know with a mortgage will never own their home free and clear. One of the reasons is because our system of doing things has been turned around, so we're focusing on the wrong thing. We're constantly chasing an interest rate when we should be focusing on interest cost. Everything we do hinges on cost, but for some reason, we have been taught when it comes to mortgages to focus on interest rate. Therefore, every 5 to 7 years, Americans refinance their mortgage. You know, I talked to a couple the other day, and they said, we just refinanced to get this lower rate. And I asked, how long had you been in your first and your mortgage before you refinance? They said, we were in our mortgage for 6 years, and the rates came down, and so everybody else around us was refinancing, so we refinanced. I said, you realize when you refinance, you got a new 30-year mortgage? They said, yeah, but we got this lower payment. And I said, guess what? You now have a 36-year mortgage. And if you do it 6 years from now, you'll have a 42-year mortgage. And if you do it 6 years from then, you'll have a 48-year mortgage. Do you see how it works, folks? We're constantly chasing an interest rate, but we're not paying attention to what it costs. This is the hamster wheel this system has us on, and we'll stay on that hamster wheel, running and running and running until we just keel over dead. 90% of the people you know with a mortgage will never own their home free and clear, and that's one of the reasons why. 30-year loans should pay off in 7 to 9 years on average. What did I just say? They should pay off 7 to 9 years on average, not just the mortgage, but, you know, throw in the student loans too. What? Yes. Throw in the car loans too. Both of them? Yes, both of them. And the credit cards, put them in the mix. Put them in the mix also. We're going to show you how to eliminate debt by eliminating interest cost. I've I've said time and time again, you don't need more money to get out of debt, because everybody's trying to get more money to throw at the principal. You don't need more money. You need to pay less interest. And how are we going to do that? We're going to put every single penny that we have to work. No lazy money here, okay? All your pennies should be making babies. All pennies make babies. If they're not making babies, listen, that's lazy money. So we've got all of our pennies need to go to work, all right? So this is what we're talking about here right now. The only way this can happen is actually through optimization. You want to know how to optimize all of your money. What do I mean by optimize? Optimization means this. You want your money to do the most it possibly can do. Now, how do I know that to be true? Because we have coupon clippers. We have people, when we buy stuff online, there may be a promo code. So if my $10 will buy something, and if I use a promo code and I can use my $5 to buy the same thing, now I'm optimizing. Oh my goodness. So if my bank wants me to pay $100,000 on my mortgage, and by following $100,000 in interest, $100,000 in interest on my mortgage, And the P.I.L.L method, using the P.I.L.L method, we can actually pay $22,000 to $25,000 in interest without changing my budget. Oh my gosh, that's optimization. That's what we're talking about today. Our goal is for you to own your home free and clear. Wow, wow, wow. So we're going to do that. Now, how are we going to do that, folks? We're going to do that without refinancing, without change to your current budget. And we're going to do that without you sacrificing your lifestyle. What does that mean? Because there's somebody famous out there that's saying you have to sacrifice lifestyle to get out of debt. You can't go anywhere. You can't do anything. You've got to eat beans and rice and ramen every day of the week. You got to go out and sell pizzas at night. You've got to drive a 30-year-old car, take all of that money, and then throw it at the principal. And then once the debt is paid off, listen, folks, that will pay off your debt. But by the time you do all of that and do it that way, your kids will be grown. And now when you're supposed to creating memories with your children and giving them a bad taste in their mouth about money, because every time they want to do something or go somewhere and develop memories like their friends are developing, you're constantly saying, I can't afford it. I can't afford it. I can't afford it. Now, what kind of mindset is that giving our children about money when we live in a world of abundance, not scarcity? We're teaching our children by saying we can't afford it. We're saying that we live in a land of scarcity and not abundance. No, 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 no. That shouldn't be, that's not what we need to be talking about. What we need to say to our children is, let's find out how we can afford it and manage our funds and make our money just do more than it was designed to do by the bankers. Now, listen, I'm not against the banks. I love the bank. I'm not anti-bank. I'm pro-education. And that's a difference. Okay. So if you're pro-education, now you can meet the bankers on even ground. So you go to the bank and you say, well, I want my money and I need this particular interest rate and I want to pay it back this way, and not take advice from bankers on how to pay back a loan. Okay. Listen, why would anybody who is building a chicken house, a chicken coop, take advice from the fox? The fox is going to build a back door into that chicken coop and start stealing your chickens without you even noticing it. You see what I'm talking about, folks? So if you need advice about how loans actually work, please don't get your advice from the lender. Doesn't that make sense? So we're going to find out how to do this without sacrificing lifestyle, meaning you can have a great lifestyle. You can live well, get out of debt in record time, and build a savings along the way more than you ever thought possible, while everybody else is struggling with trying to understand how this works. Now, why is that important? Why is that important? Because you will not hear this information. Uh-oh, come on. I got to go back one. I got to go back. You will not hear this information from your accountant. You want to hear it from your financial planner, and you will not hear it from your banker. Why? Because your accountant, while they were getting their degree, learning how amortization works and how to defeat it, was not part of their class. Can you imagine that? How loans actually work is not part of the accountant's class. The financial planner, not part of their class either. And the banker, my goodness. Let me tell you about bankers. And listen, some of my, some of my best friends are bankers. Listen, I'm trying to tell you that when it comes to bankers, okay, they're employees of the bank. And their true title is salespeople. They sell bank products. When we use the term banker, you begin to think that they are skilled and trained in the ways of banking. No, they're skilled and trained in the ways of selling bank products. The bankers, the ones who own the bank, they understand how loans work, but guess who they don't teach? They don't teach their employees. Because if they taught what we're going to talk about today, the word would get out. Guess who else will not teach what you're going to learn today? Not because I have anything against them. It is because the P.I.L.L method is a proprietary system and we own the copyright to the information. Therefore, it is impossible for Dave Ramsey to teach what we're talking about because he doesn't have the P.I.L.L method system. I'm not saying what he does doesn't work. Obviously, it works, but it's not the P.I.L.L method. All right. Susie Orman does what she does, and obviously she's very successful at it, but it's not the P.I.L.L method. Why? Because we own the copyright to that. Jean Chatzky from NBC. Oh, listen, she's doing what she does, and she's being famous. She's on TV. All right. And Larry Burkett. All these people do well in their areas, but it is not the P.I.L.L method. And there's a reason why we want to separate the P.I.L.L method from everything else. Okay. So the ability to read and defeat an amortization schedule is not taught at any level of financial education. And that's where we want to be, folks. How to read and how to defeat an amortization schedule. That's where we want to be. Listen, at any time, we've got people up on the stage that want to ask some questions. Please let me know. All right. Because I'm looking at this thing and I'm trying to get these ideas across here. So here's what we're talking about, folks. P.I.L.L stands for prepayment of principal. And let's talk about that for just a couple of seconds. Prepayment of principal. Most people know that they can pay extra on a loan any time they choose. Most people know that. But guess what? The bank has never sent you a receipt saying, by paying extra on this loan, you know that you have saved time and you have saved interest. But the bank has never sent you a receipt on telling you, here's how much time and here's how much interest you saved. What? We pay extra on the loan. We're supposed to get something for that, meaning time savings and interest savings. But the bank has never issued you a receipt telling you how much interest you saved. Listen, let me ask you something. The last time you went to the grocery store or the last time you went to a department store and you got something on sale, when you received your receipt, I mean, right then and there, at the bottom of that receipt, didn't it tell you how much money you saved by getting these things on sale? Listen, folks, if your grocery store can do it, if your department store can do it, why isn't your bank, credit card, or finance company doing it, telling you how much interest you're saving when you pay extra? They can, but they're not. We're going to find out why that is. So prepayment of principal is important because you need to know for every dollar you pay on principal, you need to know how much interest you saved. That is important. Now we're going to talk about isolating the principal amount. That means how much money are we paying on our debt? When are we paying it? Which loan do we attack? Listen, this thing boils down to doing things in the right month, on the right day of the month, and attacking the right loan with exactly the right amount of money to the penny to optimize your interest savings. What? Optimize interest savings? Yeah. So if we can find out, listen, we can actually find out for every dollar you put on principal, extra dollar you put on principal, we can figure out how much interest you're saving per dollar. And for instance, let's just say you can save $4 in interest for every dollar you apply in principal. Let's just say, okay? Let's say that's optimum. By doing something else other than the optimum move, you don't know when it goes to $3.75 per dollar. And because we don't know, then we don't know we're getting how to get the biggest bang for our buck. Listen, folks, if you could get $4 for every dollar you apply, should you ever accept $3.75 or $3.50? Should we be okay with saving something when we could save the most possible? Oh my goodness. Listen, leverage. Oh my goodness. I love this idea of leverage. Have you ever used a pulley system? I mean, listen, if you attach the right pulley system to 1,000-pound engine block, a 12-year-old girl one-handed can lift 1,000-pound engine block with the right pulley system. That's what leverage is all about. What we're talking about, folks, is taking a small amount of money, leveraging it to kill a huge amount of interest you don't have to pay. This is why it's important that you don't learn how to read an amortization schedule. Years ago, it was illegal to teach slaves how to read. Because the slaves outnumbered the slave owners, what if the slaves actually learned how to read and only one slave picked up a book on military tactics? What a difference we'd have in this country today. Come on, folks. That's what we're talking about. Okay. What we need is to learn how to read an amortization schedule, because the Bible says the borrower is slave to the lender. And how do we keep slaves? Keep them slaves? Keep them from learning how to read an amortization schedule. So we're going to understand leverage so that we can know what is the smallest amount of money I can use to kill the largest amount of interest per dollar applied. I'm telling you, once you know that, all bets are off. You can borrow money at a deep discount, then take the savings you have and then invest that money. This is where we're going to be talking about liquidity. All of your money is valuable. The money in your pocket, the money in the bank, the money on your credit cards, the money on your lines of credit. How can we leverage these things and use them to our benefit? Folks, we're not the company, we're not the folks that are going to tell you to cut up your credit cards and that credit cards are evil. I'm here to tell you that you want to learn how to use your credit cards as everyday. Debit cards are emergency money. What? Debit cards are emergency money. Credit cards are for everyday use. And when you're with the P.I.L.L method, you learn why that's true. Now, I'm going to give you just a quick example of what we're talking about here. Listen, when you use your debit card, you're using your cash. And when you use your cash, okay, and I'm trying to tell you that cash is not king here. A wise use of somebody else's money is king. Cash is not king. Here's what I mean. When you spend your cash and you understand opportunity cost, you can also invest your cash if you've already spent your cash. Your cash is your seed money. And listen, folks, when you plant seed, it grows into a harvest. Listen, if you eat the seed, you can't possibly get a harvest. Come on, folks. That's farming 101. Don't eat the seed, plant the seed, and then eat a portion of the harvest. That's what we're going to get into today. So all of your money is liquid. Everything is good to be used. We're going to show you how to use somebody else's money. Now, I love the fact that success leaves footprints. The biggest buildings downtown, just think, what are the biggest buildings downtown? Who do they belong to? In wherever you are, in your city, in your country, because this is going out all over the world. In your country, in your city, in your state, the largest buildings downtown are the banks. How did they get that way? Did you realize the banks are the biggest borrowers in town? And everyone who is telling you that borrowing money is evil, that something is wrong with it, something is wrong with you when you borrow money, you should only use cash, then how did the banks get to be the largest buildings downtown when they're the biggest borrowers in town? They borrow our money. I mean, listen, when you sign when you sign up to get a bank account, I don't think you've ever read all the fine print. But what they're actually telling you in everything that has to go with all the paperwork they give you that you never read, in there they're saying, we're borrowing your money. We're going to invest your money. We're going to pay you pennies on the dollar for the use of your money while we're making big money with your money. So here's my question to you this morning. Is it possible that we can learn a few lessons from the bank, borrow their money, get a big old benefit for using their money, and pay them pennies on the dollar for the use of their money? You better believe we can, because what's good for the goose is also good for the gander. That's what we're going to be talking about here. Listen, the last thing I want to talk about this morning before getting into some other examples is Albert Einstein called compound interest the eighth wonder of the world. So I say amortized interest must be the ninth, because it makes way more money than compound interest. Banks make amortized interest in order for them to pay compound interest. And here's the formula. Here's the formula that amortizes your loans, that makes them so doggone expensive. Here's the formula. I don't completely understand it, and I'm not going to get into the formula. Here's what I want to talk about this morning. If they have a formula or an algorithm to charge us all of this money, my question to you is, where is your algorithm? Where is your formula to cut interest cost? No, they want us to use a calculator. They want us to use a pencil and a pad, and then scribble these things out to try to beat them at their own game when they know all the rules. Folks, I'm going to ask you this morning, have you ever had a class on how amortization actually works? Have you? If the answer is no, then you're playing a game you don't have the rules to. If you're playing a game that you don't have the rules to, how can you win? This is why I say the whole system that we're engaged in, it's not your fault. How could it be when the deck is stacked against you when you don't have the rules? We're going to here's the P.I.L.L method. Our whole goal is to make sure you have all of the rules so that you can win this game. Not only be able to purchase your home, not be able to purchase your education and your children's education, not only that you can amass wealth, but enough wealth so that it could be passed on to your children's children. And we're going to start today. Whoa, mercy. I need to take a little break, Jared. What's going on?
All right. So everybody, welcome to the room. You're in the P.I.L.L Method Club. If you're new to the club on Clubhouse, go and click the greenhouse at the top, follow the club. And also click on Don's face. Make sure you give him a follow and click the always on notification, that bell, so that when Don hops on the stage, you'll be alerted anytime. Also, definitely want you to check out the bios of the other moderators in the Clubhouse room: Kenyatta, Sean, YCEO, Kirk, Valley and the Credit Goddess. They all host amazing rooms on Clubhouse, and your hallway is curated by who you follow. So if you want to learn more about what Kenyatta does in real estate, or what Credit Goddess does to help you with your business and personal credit, and Valley does with real estate, etc., you want to give them a follow. Now, this room is really great when it's interactive. So what we love for you to do if you're in the Clubhouse room is to raise your hand and ask a question. So hand raising is on. Feel free to raise your hand. It's going to really give you insight into your personal refinance, your personal mortgage situation, your credit card debt, and what's the best way to get the most interest cost paid off with every single decision made. So feel free to raise your hand, come on stage, ask your question. This room ends at 10 a.m. Eastern time, so it never fails. Around 9:30, 9:45 Eastern time, we'll have like 5 to 10 hands raised. So please don't be that person. And if you're in the room now, raise your hand, get on stage so that we can answer your question. If you're on Facebook, YouTube, Twitter, or LinkedIn, and you have a question, please put it in the chat, and our co-host Kirk will go ahead and call it out, and we will answer your question accordingly. All right, perfect. We have somebody on the stage. Carrie, thank you so much for joining. Please let us know what your question is.
Hello, thank you for having this room. Good morning and happy Thanksgiving to everyone. Well, happy day of giving thanks. So one of my quick questions were, or maybe not so quick. I am two questions. I'm sorry, I'm trying to formulate them properly.
Sure.
One of them is actually for Kenyatta. The other one, I have a student loan. I won't say how long I've had it because at this point it's just embarrassing. And I'm trying to eliminate it. I've gotten to the point where I'm like, Uncle Sam just owns me because I also have other business ventures that I'm in, but my student loan, I think, is the one area with this P.I.L.L method that I kind of don't understand how I would use the P.I.L.L method. I know that's going to come shortly. How to use the P.I.L.L method to pay off the student loan. I understand it a little bit more around mortgages, but not entirely around student loans or vehicles, right? And then my second question for Kenyatta, it doesn't have to be in that order, is I recently, I believe you mentioned that you fund real estate, and I recently purchased 2 properties to flip, and I have no funding, but I have 14 days to get it.
Okay,
That's a separate conversation.
Yes, it is. And it's one that I would love to see what happens because I am affiliated with a lot of people that can get you that turnaround. It's just a matter of how quickly we can get that paperwork in. So, yes, we need to connect ASAP. And then on the first question, we have a example that's called student loan larceny, and that is actually Don's wheelhouse, and I'm just a supporter of it. And I can tell you that yes, you can attack that student loan as well. Don, how soon are we going to do that example?
Oh, actually, we'll have it up on the screen right now.
Great. So, Carrie, are you on Facebook?
I am.
Great. Okay, so let's watch Don as he goes through this example and maybe share this with some other people so that they can be also made aware and saved from this same situation.
So, Carrie, what we're going to be doing as you're watching this, there's going to be a slight delay between what you hear and what you see. I
must have missed it, Mr. Don. Where is on Facebook? Am I going to your page?
Yes, you want to go to the P.I.L.L method page, not my personal page, but search
right.
P.I.L.L
An
method.
easy way to do it, Carrie, is if you go to ice10k.com or click where it says the P.I.L.L method above us. If you click that and go over to the right, it's 2 buttons down that says Clubhouse Simulcast.
I did that.
And then go ahead and click the first, which is the P.I.L.L method international. Click that one, and you will see student loan larceny.
So, Carrie, if are you using your computer as well?
No, I'm on my phone.
All right. If you're on your phone, as soon as you go there, we won't be able to communicate. I will be able to, if you go on your phone, I can show you what's going on, but you will not be able to ask questions until you come
I don't want
back.
to do that either, right?
Yeah. Okay. So if you're near your computer, are you?
I can be.
Okay, good. So you want to take the time to do that. Go to your computer, because I had a question for Kenyatta on this subject. While you're going to the computer, just go to ice10k.com or go to uh, the Pill Method on Facebook or whatever, and then you'll be able to see what's going on. But Kenyatta, tell us more about what she's in store for understanding how this funding situation works with business credit. Can you give us a little bit more insight on that?
I'm sorry, can you repeat that, Don? I was in the middle of helping my grandma. Go ahead.
That's okay. Can you give us a little bit of insight? Because if she asked about business credit and funding for her real estate ventures, I'm sure other people in the audience may want to know as well. Give us a little insight on that and how they can get in touch with you, just in case they're wondering.
Absolutely, you guys. And so, what we're talking about is the ability to fund everything real estate related, whether it be you have a project that you need financing for. Maybe you have a beauty salon, a dental practice. Maybe you have auto mechanic repair place or nightclub, even hotels, restaurants. If you need a hard money loan, I can assist working capital, term loan, factoring, which is using your invoices and things like that, reverse consolidations, and one of my favorite is foreclosure. If you know anybody that was hit because the moratorium and they weren't getting the rents, they're in a bad way, and maybe they're about to get ready to lose their properties, I can assist that, you guys. And also, equipment financing. If you need a fleet of trucks for your trucking business, perhaps, or a line of credit, an actual line of credit that you can borrow against. Another good thing is short-term rentals, not necessarily arbitrage, but just if you own a place and you're doing short-term rentals, we can finance that. Pretty much anything that makes money, we can help you get money for. And so I'm excited to be able to offer that to you guys. It mirrors really well with some of the opportunities here in Illinois. So if you're saying to yourself, that sounds great, but in my neck of the woods, there's not much opportunity, I can tell you that here where I am, and I'm building a network with the likes of people like Valley that are amazing real estate brokers, that we can find you the deal. That's not the problem. And so actually what we're saying is there's no reason for you to feel like you're going it alone. So yes, please tap in with me and we can put something in place.
All right, great. How do we get a hold of you again, Kenyatta? I think I missed that. How do I get a hold of you?
So that would be kenyatta10k.com.
Mhm.
And then the lending business is Yada Chic Financial Services. But I like to be personable. I really prefer relationships over transactions. And so just reach out to me and then we'll go from there.
Excellent, excellent, excellent. Miss Carrie, are you online?
Yeah.
Are you seeing our presentation?
I am not, because I'm having a problem getting on Facebook.
Okay.
Online.
Listen, are you on your is your computer up and running right now?
It is. It's
Okay.
on.
All right. And so and if you type into your browser
Mm-hmm.
ICE, that stands for Interest Cancellation Expert,
Okay.
ice10k.com.
Yeah, and it might be easier just to go to YouTube, Carrie, because Facebook sometimes is gonna want
Yep.
logins and things like that. So we're on any of the
Right.
platforms. So on that same page,
Okay.
ICE 10K, you can go to any of the options, not just the Facebook one. There's LinkedIn, there's
Okay,
Twitter,
great.
there's YouTube. As they say, have it your way. Whichever one you want, we're on there. So if Facebook's not working for you, then let's try a different one.
Perfect. ice10k.com.
Right.
That's correct.
Okay. There we go. Mm-hmm.
All right.
And
then
then I
once
can
there,
go to any method.
Right. So go
Then
ahead.
go to Clubhouse Simulcast.
Clubhouse
Okay.
Simulcast, yes, which is I think
Mhm.
the second one down on the right side of
I'm
the
there now.
screen. Then when you go to that simulcast page, you should have several options. I would just pick that YouTube one.
Okay, the watch video one. Hold on. one moment.
Yes, That's right.
Okay. Perfect.
And
Okay.
you should see the student loan larceny on the screen.
Student loan.
Well, you should see the video. Well, you should see Don and
There's
his
a few
presentation.
videos.
Okay.
I see Finance
Sorry.
Friday.
You should say how to pay off mortgages in 7 years. Click on that. It should say live. That
Okay.
first video right there should say
Okay.
live. All right. And it may give you a.
Yes, sir.
Okay.
All right, we're there.
Sorry, let me turn that down. Okay.
Okay,
All right,
yeah,
so you
just
got the
kill your audio on your computer, and you can listen here in Clubhouse, and then that's what Don was referring to earlier. There's going to be a slight delay between, because you're hearing us real time and with no delay in Clubhouse, but then you are on the screen and YouTube. There is a little bit of a delay, so just keep that in mind as you listen and watch along. And I just want to say here real quick for those that are in the comments, on social, we are coming to your questions as well. I see you, Renee Gibbs, Kiba C, thank you so much for coming through. Kent, we're here. Jonathan Jones says good morning. Thank you so much as well. Jeremiah Sams, again, Thanksgiving to you as well. And then Y CEO, of course, kicked off our comments there. But yeah, Jeremiah Sams and Renee Gibbs actually did put in questions. So we are coming to you guys once we get this example done with Don.
All right, excellent. Thank you, everybody. It takes a team. So are you seeing student loan larceny on your screen, Carrie?
Yes, sir.
All right, excellent. So so here's what we're talking about with this. I had a student, all right, who I had talked to, who graduated from a university here locally and had $9,500 in student loans, not 95,000, not 195,000, only 95,000 at 6% at $50 a month he was paying. Do you have any idea? Could you take a guess at how long it's going to take him to pay off $9,500 at $50 a month at 6%? Give me a guess.
20 years.
20 years. Okay, let's take a look at this. It's actually going to take 601 months will be coming up on your screen. It's going to take 50 years to pay off that loan that way. 50 years. Okay. Remember at the outset, I was saying, folks, if we're doing what we're taught to do, all right, there's no reason to be embarrassed because we're doing what we're taught to do. It is not, I repeat, it is not your fault because we are following best practices. Carrie, do you get that?
I do.
Okay, not your fault. We just need to understand how this thing works. So listen, let me show you what's going on. The total amount of interest that the bank wanted this young man to pay was $30,050 in, $20,550 in interest. $20,550 in interest on a $9,500 loan. The total interest paid as a percentage of principal, 216%. So that's 6%. Ballooned to 216.316%. Was there anybody to explain this to this young man? How could he have known? Okay. All right. So here's what's happening. Now on your screen, you're going to see payment 1 through 13. And on the very first payment of his $50, $2.50 went to principal. How much went to interest, Carrie? Are you seeing that? How much?
$47.50.
Listen, how fair is that?
Mercy.
No one told this young
Robert.
man. No one told this young man that $47.50 of his payment was going to go to interest. Well, listen, it gets better as we go down because the next month, see, when he paid his $2.50 and $47.50 went to interest, he was left with a principal balance of $49,9750. Now he owes less, so his interest payment on the next line has to be less, just according to math. But amortization does this. His next interest payment on line 2 is how much money?
$2.51. Oh, interest $47.49.
Oh my gosh. You mean it's just a penny difference?
Penny.
Carrie, did you know the loans work like this?
I found that out.
Yeah. So here's what we're talking about. So I expressed to the young man, do you know you can pay extra on these loans?
Mm-hmm.
Okay. Now, most people say, well, Don, where do I get that extra money from? After you pay all of your bills, after you do everything you're supposed to, all right, there may be a little money left over at the end of the month. Would that be true, Miss Carrie?
Yes.
Most people think that little bit of money left over at the end of the month can't do much. Is that your thinking as well?
It's not. I think I just became a little resigned when it came to my student loans.
Okay. All right. So let's
Yeah.
take a look at this thing. All right. So now, if we're making that first payment in January, let's call that first payment January. February's principal payment is how much money?
That's line 3 you're referring to?
Nope. I'm sorry, February. If we're starting this thing out on January on line 1,
Oh, okay.
February's principal payment would be how much money?
Oh, it's $2.51.
$2.51. So do we have to wait till
Mhm.
February to give the bank that $2.51?
No.
If we had it, could we give it to them in January as well?
Yes.
So we would give the bank the $50 payment plus, let's give them the $2.51. Okay.
Mm-hmm.
And if we do, we're already paid down to the principal balance on line 2, $9,494.99. We're paid down to there in January, aren't we?
Mm-hmm.
That means our next loan payment, student loan payment, would be on what line of the schedule?
The $2 student loan payment would be on line 3.
Exactly.
Correct?
So we got rid of line 2 for only $2.51, not $50, correct?
Correct.
How and what happened to that interest payment of $47.49 on line 2? What happened to that?
It was eliminated.
Eliminated for $2.51. Miss Carrie, do you see how easy it is to get rid of that? So now I need you to take a look at column 3 and column 4 right now, where we have cumulative principal and cumulative interest. Are you seeing those lines?
3 and 4.
Column
Yes.
3 and column 4. Okay. So what we're also looking at is line 12 on that schedule. After 1 year, here's how the student loan company wanted this young man to pay his student loans. After 12 months, he would pay this loan down by $30.84. How much interest would he pay in that amount of time? Look at cumulative interest right next door to the right.
$30.84.
That's the principal. Look next door to the right and see how much interest they wanted him to pay.
$569.16.
Now tell me, is that legal to charge this young man out of school $569 interest just to pay off $30.84 on his loan?
Right. Yeah.
Is it legal?
No.
I'm asking.
It shouldn't be. It is.
It is, but it shouldn't be.
My God.
But we didn't ask if it was moral. We just asked if it was legal.
Yes, it's legal.
Okay. So what if we did this, Miss Carrie? What if we did this? What if we decided we wanted to prepay the $30.84, pay it on line 1? Would the credit would the loan student loan company be obliged to pay $34.84 on principal right up front? Take the $50 in payment and then pay an additional $30.84. What would happen?
It would eliminate that cumulative interest.
Wow. Look at that. All the interest payments between line 2 and line 12 would be eliminated. And what happens to the $569.16 now?
It's gone.
Miss Carrie, would you like to know how you can eliminate all of your student loans in an average of 5 to 7 years?
Yes.
All right. Then what you need to do, please, is when you that 10K card you clicked on, you can also get a savings and earnings report. Click that button. fill out the information. Someone from my staff will give you a call, confirm your information, and set up for you a consultation. Now, our
Okay.
consultations are only $150, but
Okay.
if we can save you tens of thousands of dollars, it's probably an investment well made. What do you say?
Absolutely.
All right, Carrie. Miss Carrie, do you have any other questions for us this morning?
I do,
Go
but I'm
ahead.
going to let others speak.
All right. So
Because I
you.
could be here all day with my questions.
All
I'm
right.
a, yeah, I'm a student, so I love learning more information. So I'll leave the floor open for others, and then if there's time, I'll circle back.
Listen.
Otherwise, I'll do that consultation.
Yes.
And more than one if I need to.
Well, listen, you just stay on the stage, and if we have time, we'll get back to you. But listen, your question has helped a lot of people. Please don't ever be embarrassed about what you don't know and couldn't have known because it wasn't taught at any level of your education. Can you do that for me?
Absolutely.
Thank you
Thank
so
you.
very much. All right, Jared.
All right, all right. So, Don, also, if somebody wanted to get a savings and earnings report and have a consultation with your team in that way, how would they do that?
All right, folks, what you're going to do is click that button above our heads, click that above our heads. And if you're on, and if you're streaming audio, then you want to go to ICE10K.com. And ICE stands for Interest Cancellation Expert. ICE, the number 10, the letter K.com. And then find the button that says Get a Savings and Earnings Report. Follow the instructions, all the instructions there. Read carefully, okay? Because we're trying to keep robots out of the system. So read carefully the instructions, follow the instructions, put in your financial data. Someone from my office will call you. Now we're being inundated with calls right now. So if we try to get everybody called within 48 hours, but if it takes us 72 hours, please don't be mad with us. We're doing what we can. We will get to you, I promise. So here's what's going to happen. You're going to fill out that information. Someone's going to give you a call, confirm that information, and then set up a consultation with us. All right. And the consultation is only for the first hour is only $150. And we're going to help you do what you need to be able to do when they set up that consultation. And then you'll know the month and year you'll be debt free and how much interest you could save. And we're going to show you how to take the interest savings and turn them into generational wealth. How about
Let me just add there
Yes.
as we get ready. Jared, it's okay for me to grab a couple of questions, right?
Yeah, before you do, I just
Okay.
want to just recognize. Yeah, Kirk, just give me a second. Yeah,
Sure,
before
go
I do, I just want I want everybody in the clubhouse room just to make sure that you click the greenhouse at the top, follow the club, follow Don, click the always on notification next to him, and check out all the moderators and what they do. Hey, Vernita, good to see you. Definitely check out her profile as well. She's amazing on this app. And then Cruz, I just want you to know that we see you on the stage and we'll get to you as soon as Kirk addresses some of the questions on the other streaming platforms. That being said, Kirk, go ahead and go for it.
Yeah, we got a couple of questions here that we want to grab, Don, but I just wanted to share with Carrie and everybody that's in the room and that's watching online. I had my consultation on Wednesday. So my family and I had our consultation on Wednesday, and the information that we received, this was the topic of conversation at the dinner table for Thanksgiving with my family. I said, everybody needs to go line up and go get your consultation done because we're wasting our money out here. I mean, you saw it in the example. We're wasting our money out here. And if you want to be free from the bondage, you want to get this consultation done. So you see that scrolling on the bottom of the screen right now, ice10k.com, get your savings and earnings report. All right. So we had Renee Gibbs in the comments. Renee, I hope you're still with us. Renee Gibbs says, please show us how to work the formula. Can you plug in some numbers? I have 100K with 3.5 interest. Can you show me that? So Renee says, and then she also she just commented again. So she is still with us in the comments. She says, do you pay twice for mortgage and student loans? So I think she just wants a little bit more of the mechanics. It sounds like, Renee, you may need to, grab that savings and earnings report as well. But Don, what did you have to respond here? She said, I have 100K with 3.5 interest.
All right, 100K, 3.5 interest. What is the term? If we can get that, we can do something for you. What is
All
the
right. Okay.
term? So is it
While she's gonna
yeah,
respond, and there's gonna be a slight delay, so she'll
yeah,
respond in just a second.
right.
While she's responding, Jeremiah Sams asks, "Do anyone online deal with HELOCs? HELOCs. I'm assuming that's the home equity line of credit. Is that what that is,
Yes.
Don?
Yeah, we
Okay.
have people that can help you with HELOC, but the best way is to work with if you have a relationship with a banker or credit union in your area, that is the first place to look. If you're not getting good response, then you need to you need to contact Kenyatta.
That's it. That's
That's
it.
it.
That's it. That's it. That's it. That's it. I think we've shared how you can contact Kenyatta us a couple of times. I'm not certain if we want to share that right now, but Renee, we
Yes,
are
so
just yes. Please go
yes,
ahead.
yes, I would love to because
Please.
I love my 10K card so much and I like saying it. So you can go to Kenyatta10K.com. That's KENYATTA 10K.com.
That's great. Thank you so much, Kenyatta. And Jeremiah, I'm hoping that you got that. And if you didn't, definitely check out her profile in Clubhouse. She's got all that information there as well. Again, you heard the comment, the response, I guess, from Dr. Don. I call him Dr. Don. I know that that's not maybe not his official title, but I call him Dr. Don. The information he's giving out here is definitely on the PhD level. Renee Gibbs, we were hoping that we would get from you the term for that information. You said 100K, 3.5 interest. We were looking for the term on that. And if you can get that to us, we will be able to respond a little bit more, give you some more detail where that's concerned. But I think with that, Jarrett, you said we have some people on the stage. Let's not keep them waiting. We'll get back to, Renee did respond. So, so I apologize. Renee did respond. Renee says it's 30 years, Don. 30 years.
30 years. Okay, so what we're
30
going to
years.
do is go ahead and see if we can handle that right now very quickly.
Okay.
And I'm going to put that example on the screen as well. And so we're going to stop here.
All right.
And
We'll let me wait until you get that one shared. Good.
there you go. All right. And listen, folks, I'm becoming an expert on
I'm
this.
telling you. I'm telling you. I'm telling you.
You
I'm
look like a
you.
kid in the candy store too, Don.
Listen, I love this. I love this stuff. Yeah, and listen, I got a great teacher here.
Listen, man,
So
crash course, but he's running with it, man. It's amazing.
Okay, so we've
Renee
got
has shared
100.
some more information. Okay,
Okay,
go ahead.
Go ahead. What you got?
I'll pull it up on screen. She
All right.
says, is the 150 a one-time savings report for mortgage and loan report? That's her question. That's the question.
All right. Well, what we're going to do is we give you
and then she also, sorry,
Mhm.
Don, she also said she's 9 years into the loan now. So continue.
Okay.
Sorry.
9 years in. Okay. So here's what we're talking about, folks. You want to get, when you fill out the savings report, here's fill out that information. And when we give the report to you, you're going to know the month, day, and year that you will be debt free on the using our system and how much interest you could save. And then we'll share with you how that money can be used to build generational wealth. At that point, you can then become part of our P.I.L.L method family. All right. And then you could engage with us at a different level so that you can get the opportunity cost calculator and our lifetime service. But the $150 is to just share with you what can happen. And then if you choose to want to do further business with us, then we will go further and then show you how you can partner with us for a lifetime so that we can not only help you here, but also in the future. So that's what you're going to get for the $150. All right.
All right. Thank you.
So we have $100,000 on here. All right. For 30 years. And it's what's the interest rate? 3%?
Let's go back up a little bit here. 3.5. 3.5 interest, 100K.
3.5.
And yes, 30 years.
30 years. Okay, so here's what we're looking at, folks. And I want you to know that I already know that 3.5% really means over 50% interest paid back. All right, so we're going to scroll down. Here's the payment, $449.04. So what we're taught to look at is the interest rate and the payment. So if the interest rate looks good and the payment is affordable, we get the loan, okay? Especially if we qualify. But here's what the bank wants, okay? Here's what the bank wants. $61,654.40 in interest on a $100,000 loan. What?
My.
So if you have a $100,000 loan and you pay back $61,000, how in the world is that 3.5? Is this number 3.5% of this number? No, it's actually, look over to the left. The total interest paid as a percentage of principal is 61.654%. That's what the bank wants. That's what 3.5% really means. So, folks, we need to start attacking this right now and doing it in the right way. So, folks, and so the question was, how does this work on a long time loan like we have here? It is the same. It's the same thing. You have to know what happens when you prepay principal. If we use the bank's timing is come in once a month or send us a payment once a month. And every month you send us a payment, out of that payment, we're going to take some principal and you're going to pay a bunch of interest. And the next month, because you owe less, we're going to charge you less interest. So the first month you pay $291.67. In month 2, it goes all the way down to $291.21. In month 3, it goes down to $290.75. Do you see how much interest we're paying and how we're paying back the loan? You think that it gets easy to believe that $449 is actually doing more work than it really is, when this over here in the principal column, this is loan payment in the principal column. So you're paying back your loan with $150, $160 payments. That's it in the beginning years, while $290 and $280 payments is going to interest. So this is loan payment and principal. Interest is nothing more than rent on your money. We have gone from renting apartments and renting houses to renting money our entire lives. Rent is rent, folks. You want to stop paying rent? We're going to show you how. So, so here's what we're talking about. And when you make that very first payment here, all right, then anything that you put on principal in the same month kills interest. So I'm just showing you here what happens when you do pay a little extra principal. And I'm just picking out a number here. Our program will tell you, the opportunity cost calculator will tell you exactly how much to pay and when to pay. So we're just picking this number, $157.83, which would be on line 2. So if your first payment is in January, line 2 would be February's payment. So when you make your payment in January, you don't have to wait till February to give the bank this $157.83. If you gave it to them early, then you eliminate line 2 from your schedule. And your next payment for February is actually on line 3 of the schedule. So you're compressing the amortization schedule. Payment number 1 is now touching payment number 3. Payment number 2 is eliminated for a fraction of your payment, the $157.83. And the interest that you would have paid because you disrupted the bank's timing, $291.21, you no longer have to pay now. Okay? That's how you save money and you save time. Anytime you give the bank extra, and we're going to show you how to do that. So by paying, now I'm going to give you the basic structure. First, on your list of things to do in your budget, and we're going to help you to create a budget. First is, how do we want to live our lifestyle? How do we create memories for our family? What do we spend on our family to have a good time? We put that in the program first. We budget that. Then what do we pay? What are the minimum payments on our loans? Because we're only going to make the minimum payments. Then how much money are we putting away for savings? We can't touch that. We got retirement savings. We can't touch that money. And then what is left? The money that we live on, the money we pay buy food with, electricity, our church contributions, the gasoline that we purchase. So so all of that just make sure that we pay all of our regular monthly bills. Then there's money left over. We show you how to use the money left over, optimize those funds, and the program will direct you to put that money in savings. When that money has mounted in savings to the right amount of money in your savings account, the program will then direct you to take a certain amount of that money out of savings and apply it to the debt. We're going to choose which debt. We're going to choose which month. The program is going to choose which day of the month to optimize your interest savings. So for every dollar you put on the debt, you're going to know that you have just saved the maximum amount of interest per dollar when that money is applied. So I hope this helps you to understand what's going on here by what happens when you prepay. Now, that's why you need the opportunity cost calculator, because every person that comes to this show, the first time they come, they want, what is the one thing all of us can do exactly the same so that we can get a good result? There is no one thing to do. There's only the right thing to do for your family or for your business. And the only way that we can do that, folks, is to do the math it takes to generate a program just for you, optimized for you, and we're going to make sure that it's individualized for you. That is why you need to fill out a savings report. Okay, I hope that answers that question. Who's next?
All
All right, I
right.
think.
So,
Go ahead.
yeah, Kurt,
No. I was gonna
something?
kick it right to you. So thank you.
All right. So for everybody that new just popped in, welcome to the P.I.L.L method. Go ahead and click the greenhouse at the top and follow the club. This is how to pay off mortgages in 7 years. Yes, you read that correctly. Don, who's to the left of me on Clubhouse, he has a method that helps you save astronomically on interest cost by prepaying and also just utilizing the whole P.I.L.L method. So if you'd like to learn more, click the greenhouse at the top and read the description. And I want to thank Giuseppe for coming into the room. So if you're not familiar with Giuseppe, make sure you click on his profile. I would highly recommend giving him a follow. He's a real estate investor and mentor, also a cryptocurrency investor and motivational speaker, and he adds a ton of value on Clubhouse. So thank you so much for popping on the stage. And also want to shout out Boogie Nights, aka Erica Doyle. She hosts a lot of amazing rooms, has a room coming up about CRE brokers. So you definitely want to tap on her face as well and give her a follow too. And also all these other amazing moderators. Really appreciate it. When it comes to, I just saw your text on. I would love to go through one more example if that's cool, but if you want, we
can go ahead. Let's go ahead and do that example.
All right, cool. So Cruz, thank you so much for your patience. Please let us know what your question is.
Hey, everyone, thank you for the opportunity. I love the wealth of wisdom that's being shared. My husband and I have a mortgage which we have been paying into. So we should be done with that in a few years. Thinking of my husband's going to retire within 5 years or so. So we plan on moving to a different state. My question is, we should be paid off with our mortgage even before we retire. Is it better to be mortgage free, debt free, or because we want to use it as an investment property when we move we're planning on moving to Texas, is it better to keep it as an investment property without a mortgage, or is it better to tap into the equity in the property and then still have a mortgage which we can pay for it by with rent? What would be the wisest thing to do? That's my question.
There we go, Cruz. How are you doing today?
I am fine, thank you. How are you?
I'm doing fine. Listen, that is a great question. That is a great question. So here's what we need to do. You said that about how many years do you have left on that mortgage that you have now?
I want to estimate. I want to say it's maybe 4 years or so.
4 years. So you've paid.
And I'm paying ahead into it. It was a 15-year loan, but
Right.
we're gonna pay it off in half the time.
Okay. So here's what you want to do. Let's not. I want to make this very, very clear, and so everybody can hear, because it's so important. It is not how fast you pay off your loan that matters. It's how cheaply you pay off your loan that matters. You want to know how much interest you have left to pay on that loan. You pay the majority of the interest already. So any money, any extra money you put on the debt, all you're doing is saving on the interest. So if you only have a few dollars worth of interest left to pay, then the question becomes, is it worth it to put the extra money on the debt? Do you see what I mean?
Keep talking.
All right. So here's what I mean by that. Let's just say that you have, now I have a client, okay, and with what they have left, okay, with the amount of money that they make, they're going to be able to pay off their loan in just 3.5 years with the amount of money that they make. But all they're going to pay in interest is $16,000. That's all the interest they have left to pay is $16,000, right? So here's what we're talking about. If you know how much interest you have left to pay, and you know how much money you're going to have to put towards that to save $16,000, then you got to tell yourself, is it worth putting? Now, he had $260,000 left to pay. 260,000, but in my program he only has 16,000 in interest left to pay. So, Cruz, the question becomes, do I want to try to pay off as quickly as I can 260,000 only to save $16,000 in interest? Is that how you want to spend your money, Cruz? No. So you want to know. So here's what I tell everybody in this situation. You want to know, if your mortgage was 0% interest for the entire time, is there any financial benefit to you to pay the loan off early if it's at 0%? So if you only have a little bit of interest left, then what is the benefit for paying that off? So if you're about to get into some real estate, and you're about to get into some other real estate investments.
Yes.
Okay, somehow when you first start talking, it's muffled and then it clears up. So you're about to do some real estate investments?
Yes, I am. Is that better?
That is perfectly better. All right.
All right.
So here's what we're talking about. You want to do what's called a cash out refi on the current house. All right. And when you're looking to get into your real estate investments, all right, take a look at the cash you have available. Take a look at the properties that are around, okay, and see how many down payments you can put on other properties, not just one property. How many down payments can you put on properties that we can turn into centers of profit? Okay, so I'm just giving this as an example. Let's say you can take out $100,000, and in your area, you can get the rental properties for about $20,000 down. So your $100,000 can actually help you to acquire 5 properties. Does that make sense? Is Cruz still there? Did we lose
Cruz,
her?
if you're speaking, you're on mute right now.
She's still there.
Okay. Just assume she said yes, sir.
Okay. All right. So here's what we're doing. So if that's the case, then taking that money out, it says, well, Don, we're starting our loan all over again. All right. So let's just say I got this example. Do we still have our example on the screen? So let's go ahead and say
At it
because
right now.
we, yep. So just because we have let's say we take that new loan out, $350,000 now because we did a cash out refi. 350,000 at 3.5%. This is our new payment. Okay. Now, what we want to do is see how we on our property here can cash out refi years sooner. And we took out some cash to develop some rental property. All right. They're cash flowing. We're going to see how we can attack these loans in a way that's going to save us some money. Okay. So now let's take a look at that. Now, all the extra money she puts on is not saving a tiny bit of interest, but huge amounts of interest. In the first year on this mortgage, the bank wants her to pay out almost $19,000. Pay almost $19,000 in the first year just to get $6,700 worth of potential equity. Well, what if they have some money left on the side so that they can have some cash available to do repairs if need be? So we can actually use the cash we have on the side, not the money that's coming in from the rents that we need to reinvest again, but some of the money that's sitting on the side that's sitting in a bank account making 0.1%. And this is just an example. But let's say they have about 30,000 in cash over here, just just in case something goes wrong. Could we borrow $6,700 from the cash that we have on the side, advance that to the mortgage, all right, and pay down to line 12 on our mortgage in 1 month instead of over 12 months? And instead of paying $12,000 in interest to get to the same place, it only costs us $1,020 in interest to do the same thing. So, in answer to your question, get with us. We'll show you how to set the whole thing up. All right. Because this is one thing that there's a lot of math involved. And people think that because we give quick answers, and like watching a crime show on television, they really don't solve those crimes in an hour. They just don't. And the information we're giving you information on how to set up a lifetime situation to save hundreds of thousands of dollars in interest and turn that money in savings into millions of dollars. And I really can't teach that in an hour or two. So if you really want to know how all of this works and how you can better leverage your money so you're getting the biggest bang for your buck, yes, I would cash out refi. I would try to get as many properties as I could with that refinance money and then put it all in one system. So you can now get out of debt the fastest way possible by getting out of debt the cheapest way possible. And we're going to show you that at the P.I.L.L method. Cruz, does that help?
Extremely helpful. Thank you for all the information. I really appreciate it.
You are so welcome. So go to ice10k.com, and if you so choose, fill out, get the information on how to get a savings and earnings report, and we'll be glad to help you. Anyone else today?
Yeah, Don, I actually have a quick question for you. So,
Sure.
you wrote a book that basically breaks down the P.I.L.L method. We'd love for you to tell everybody a little bit more about what they can get out of it if they purchase and read that book. And yeah, basically what motivated you to put that together.
Okay, listen, folks. Here's what we're doing. If on if you take a look at ice10k.com, there's a button there that says that you can get our book. All right. And out of 33 million titles on Amazon, there's only one that talks about how to get, how to understand an amortization schedule and how to defeat it. This is your beginning study right here. And it's going to talk to you about why you need math to handle your finances and not heuristics or rules of thumb. Yes, it's not just all you have to do is this or all you have to do is this. There's not just one or two or three ways to get out of debt. There are millions of ways you can configure your finances to get out of debt. So, and by understanding that, then you know you need an opportunity cost calculator on your side, helping you to figure all of this out. So by reading that book, you're going to understand how to get started in the system. And not only that, but by getting the book, you can get a 10K card. Oh my goodness. Somebody asked me, Jared, what are you doing for Black Friday? See, here's what we're asking you to do. By getting the book, we're going to explain to you how you can upload your information about buying the book and how you can get a 10K card. But if you will also, once the book arrives, take a picture with you and the book and email it to us. All right, send it to us with you and the book. We will send you an additional book signed by me. So you're going to get two for the price of one. One is actually going to be signed, and all you have to do is send us a picture of you holding the book once it arrives. And now you,
Done.
yes,
Can they also post the book and tag the pill method? Will that be work instead of emailing as well? Can they do that too?
listen, man, you need.
How in the world do you pop in this room at the moment he mentions your name like a superhero? I don't understand.
Sean, talk to us about how they could do that and post that info. Because if they even, yes, you're right. If they would post that on our Facebook or YouTube or Twitter, if they will post it, we will send them a book. But they still have to send us their address so that they can get their signed copy for free. We're gonna ship that to you for free.
There you go, Don. So, guys, look, it's super, super simple. Once you purchase the book from Amazon today, all you need to do is to post it on your social media, tag the pill method, and then just click on the button on Don's card that says "I'm ready," or even send them an Instagram message. Hey, I just bought the book. It's Black Friday. You promised me a second book, and Don is gonna get so excited. He's gonna get your shipping address, and he's gonna send you a signed copy, because it's one thing to get the book, guys, but another one with a signed copy. Oh, that's a different level altogether. So go
Oh
on to
yes.
Amazon, guys. Click on the link at the top. Click on the top left button. Go on to Amazon. Purchase a copy of the book. And then when you do receive your book, take a picture, post it on social media, and tag the pill method, guys. Once you're finished doing that, boom, all you have to do is to send Don a message or go onto his 10K card, click on the button that says "I'm ready," and upload the information. Don will send you a signed copy. Guys, happy Black Friday. Let's go out and change the world today. Back to you, Don.
Listen, Sean is always telling me when we go off, say, listen, man, Don, you just stick to the pill method. Let me explain how the offers work.
Oh my.
Listen, man, everybody has their niche, all right? And explaining the offers is not mine. So we are so glad to have Sean 10K in the house. He is the creator of 10K cards. Sean, listen,
Don,
tell us a little
before
bit
you
about,
even do that,
come on, man.
you will never see me try to explain how to save interest. That's not my thing.
Oh, listen, is that a backhanded way of saying, Don, leave the offers alone?
That's a backhanded way of saying, Don, I'm gonna just use my bicycle in my lane, and I'm gonna leave you in your Ferrari in your lane. That's it, bro. God damn. But but hey, guys, for those who do not know what a 10K card is, all right? If you look at the link at the top, you'll see the pill method. When you click on that link, it takes you straight to Don's 10K card, where you can find his book. You can find the credit report. You can get access to Don's full card. It's a way to put all of your active links in one place. So when you're dealing with a client and the client want to connect with you, just by the click of one button, they can get in touch with you just by one touch, guys. So put all of your links in one place: your website, your social media, your phone number, your email, your payment options, your promo, your calendar, anything that you want to communicate with your clients. Put it all in one place, guys, and that's known as your 10K card. So be a part of the movement. It's going strong. We're going far, and I would definitely want to have you on board. And what I like about what Don is doing, Don is literally paying you to not only educate yourself, but to position you to help your community. So when you get a copy of his book, guys, a 10K card is included with the package. Back to you, Don.
All right, Jared. Do we have let's see. Jared, tell me how do you want to do this? You want to go to our stage here? You want to talk with Kurt to see what he has going on? Listen, you take over.
All right, perfect. Yeah, so again, make sure you click the greenhouse at the top and follow the club. Also, love for you to check out, follow Don and all these amazing moderators on stage. They're here to support Don in his message, but they are super, super dope on this app. They have amazing content, and yeah, we'd love for you. And I don't know why the last question left, so you know what? If there's no other questions in the room, which I'm surprised because Carrie and Cruz got some amazing value. Let's go to Kirk. If there's anybody in the simulcast that have any questions.
Thank you so much, Jared. There are actually no more questions in the simulcast. I think just some comments around the content that's being shared, but no questions. But I do know, Jared, that Carrie said she has more. So I don't know if Don, if we want to go back to her. She said she had plenty more. She was just kind of leaving the stage open, the room open. But hey, we still have a little bit of time, and if she's got another question, that could be a good point as well.
All right, perfect. So, Carrie, I'm going to pass it to you, but I would love for Giuseppe and Boogie just to give a quick 45-second introduction and
Sure.
just let people know that are streaming on YouTube, Facebook, and LinkedIn how they can get in touch with you. So, Giuseppe, please.
Thank you so much, Jared. Thank you so much, Don. I'm happy to be here. Black Friday. Use Black Friday to invest money to increase, to grow your knowledge, your skill, because I'm exactly person that show everybody that you can start in any part of the world without language, without money, start from scratch and to be millionaire only if you have knowledge and work hard. Remember, knowledge is only potential power. The only real power you have is when knowledge meets the action. And I'm exactly the result. 5 years ago, I was homeless. Today, owner of 507 property in Cleveland, Ohio, and 187 employee, my management company, my construction company. Happy, honored to be here. This is Giuseppe. Check my Instagram. I love consistency because what I say, what I do is the same thing. This is Giuseppe, and I'm complete for now. Thank you.
Thank you,
Awesome.
Giuseppe.
Thank you so much for coming up, Giuseppe. I appreciate you. And Boogie, if you want to give a quick intro.
Good morning. Can you guys hear me?
Yes, we
can.
All right. Thank you so much for having me up. How's it going, Done with the P.I.L.L method? I see you in here dropping the gems early on the Black Friday. So I just wanted to come in and shout you out. I love your rooms always. You are absolutely amazing. I've been on your Zoom meetings and wow, your strategy is absolutely beyond. I'm not even going to focus on me today. I'm just thankful for my Clubhouse family and friends and glad to be here. You can hit my 10K card and visit my bio to learn more about me and what I do. Shout out to Sean 10K and YCEO and Kirk and my girl Kenyatta. Hey, y'all. Hey, Credit Goddess. Oh, my gosh.
Hey, beautiful.
It's an amazing room. So I'm just glad to be here. I'm trying to clean up from all of yesterday's madness.
Oh, mercy.
And keep this party going and get ready for some Black Friday things and
amazing.
Make sure the next year is amazing as well. So it's a lot going on in Boogie's world. I'm planning on next year trying to maximize 2022 and of course maximize the rest of 2021. So I hope that you guys have an amazing day. This is Boogie. Those are my words.
All right. And Vernita, you never got a chance to introduce yourself. You could do a quick 30 seconds and then we'll go to Carrie.
Hey, Soror.
All right, Vernita might be away. And also want to shout out my friend Amin. She got the balloon. Happy Clubhouse anniversary. You have to follow her if you're looking to break into tech. She's got a room coming up today at 2 p.m. Pacific time, 5 p.m. Eastern time, where she details her journey on Clubhouse, everything she's learned, and she's going to drop a ton of gems on all the tech resources that she's been able to accumulate that got her like 5 offers from tech companies and landed her a prestigious role at a top tech company as well. So with that being said, Carrie, thank you so much for your patience. I would love to hear your second question. And if there's anybody in the audience that wants to squeeze a question in, feel free to raise your hand and we'll let one more person up. So Carrie, go for it.
Sure, thank you. So this question that came up, it was not the original question I had, but it came up after that person spoke about refinancing. And I wanted to know, can you take out, Mr. Don, can you take a HELOC instead of a cash out refi and kind of let the HELOC do double or triple duty? So you're invested in property, you're also using the HELOC to pay off your mortgage as well. And since it's an evolving revolving account, that money kind of recycles itself.
Carrie. Flesh and blood did not reveal that unto you.
Oh, sorry.
That is amazing. Oh my gosh. What?
Was I not supposed to let that cat out the bag?
Listen,
I don't know.
listen. That is amazing information. Oh my goodness. How could I have, why didn't I think of that? Doggone it. That is powerful stuff. Listen, what she's talking about, folks, is instead of taking out a loan, you can get a cash out refi. You know, you could to cash out, you can get a HELOC, a home equity line of credit on your current property. And instead of doing because when you take out a refinance, do you know that they're going to charge you closing fees on that? You got to pay a lot of money. Do you know banks are trying to give out this home equity line of credit money, and they take care of a bunch of those fees for you. And a lot of the banks will even do what do you need? What is it that you need to take a look at the house or how they appraise the house? Appraisal. Come on. The banks will even pay for the appraisal to give you money. Right? And the line of credit is good for about 10 years. And you only pay for what you actually use. That money can sit there, and we'll show you how not only to save money in interest by using a HELOC, we'll show you how you can double save by using a HELOC, where you end up paying pennies on the dollar to use that money over and over and over again while you're building your portfolio and building generational wealth for your family by employing a strategy of a home equity line of credit. You know, one of the things that we did was in our first home was to get a home equity line of credit on that house. Okay. Then we moved to a new home. All right. And then rented out that old home. All right. And then we got a brand new equity line of credit on the new home. And then guess what? When we rent out this one, we're going to get a home equity line of credit on the next home. So everyone we're moving to, we're going to be moving in with equity, folks, so that we can get an equity line on each one and use that money that, just as Carrie has said, I don't know how she knew I was doing that, because I only met Carrie. I only met Carrie today. So yes, Carrie, that's exactly what we can do. But you definitely, so you know, I was watching one of those shows, one of those Daredevil shows. And you know what they say on the Daredevil shows? What's the disclaimer? Don't try this at home.
At your own risk. Right, at home, yeah.
Okay, folks, what we're talking about works, but it's insanely complicated. You can get yourself in a lot of trouble. All right. You know what they say. We have just given you enough information to be dangerous. You really do want to get some guidance on all of this so that you can optimize the use of this money. There's a couple of ways you can learn. You can learn by making your own mistakes, or you can learn from the mistakes I've made over the years, and we've eliminated those mistakes and put it in a nice little neat package for you, so that you can get the P.I.L.L Method program, which is a lifetime program. Oh, wait a second. The P.I.L.L Method program is not only a lifetime program, it's probably the only financial program that's guaranteed to work, that's guaranteed for a lifetime. What? Guaranteed to work and guaranteed for a lifetime. There's absolutely no risk to you in all of this. If the program fails to work, you don't pay. Now, in 16 years we've been doing this, Kurt and Jared, 16 years we've been doing this. If you go and if you look up P.I.L.L Method on Better Business Bureau, you'll see that we have an A+ rating and no complaints. No complaints. No complaints in 16 years, because the guarantee is that strong. It is that strong. We take care of the clients. That's it. There's nobody that does it better than the P.I.L.L Method. No one. So listen, come on board. Let us help you get to where you want to go. Miss Carrie, did you have another question?
Yes, I probably do, but I'm trying to remember what my original question was.
Well, while you're thinking about that, I've got one last example. So go ahead. You got it?
Yeah, with the P.I.L.L Method, right? I know you mentioned the student loans,
Right,
and you mentioned the mortgages. So across the board, would it be the same tactic for vehicles as well?
it would be the same tactic for vehicles as well. In fact, I'm going to go over an example where we can look at a mortgage, we can look at a vehicle loan, and a credit card. Would you like to see that example right now on the screen?
I would. I can't see because I'm no longer in front of in front of my computer.
Listen, you can see it because it's gonna live forever on the internet. You can go back and see it anytime you want.
Right.
Listen, before I even get to the last system, the last example, how are we able to do this, folks? Do you see this setup that we have here? Do you see my studio here? What's going on here? Kurt actually, Kurt Nugent, who is the our production, expert extraordinaire. Listen, he set this up for me. All right. He set this up. Listen, this didn't come out of my brain. It came out of his brain. All right. And to set this thing up, and who came up with the idea of streaming this live to all these platforms? He set this up. My goodness. If you have a brand, if you're trying to build a brand and you're trying to get it out there, listen, do you know how powerful it is to do a show like this? And you never know what kind of nuggets are going to be dropped. You never know what kind of questions are going to come from the audience. But there may be something that is just totally amazing. But when it happens live, and it's going to live on the internet forever for people to watch it over and over and share it to their friends and family. Listen, this show is going to live out there forever.
That's right.
And do you know what it's going to do for our brand? Kurt, you got to tell them a little bit about this before I get to this last example.
Oh man, listen, you're doing a good job. You're doing an excellent job. This is what it's all about. I mean, honestly, as he has said, there's really no better way for people to experience your greatness than for them to see you do it live. I did a show for a finance guy. I told you about this one, Don, and we had a financial advisor on screen for about 20 minutes. 20 minutes, and he was taking questions just like you, and he was responding to those questions. In those 20 minutes, people saw his passion. People saw him responding with no notes. People saw him giving of his expertise and experience, and they needed no other demonstration. They needed no marketing. They needed no pitch. They needed nothing. People began putting in the comments, where can I book you? How do I sign up so that I can be on your program? Same thing for public speakers. Same thing for those in tech. Same thing for those like me in live streaming. You want people to understand who you are, what you have, your superpower that God has given you to be able to give to the world. You want to give them an opportunity to experience it, just a taste of it live. And that's what Don's doing today. You guys are seeing how he's able to break it down live. And that is all you need. I know that's all I needed, to be able to sit it and just listen to him for just 5 minutes and say, this is a person who has gone through the fire, right? So they're not sharing with us from a place of, I've done it all right. Am I saying that right, Don? He's sharing this. He's sharing this with us from a place where he's saying, I've made the mistakes, so you don't have to. I've figured it out. And so now here is the end product. And so we get a chance to benefit from that. And that's why this thing works. That's why it works. Now, Sean Cannell, who's somebody that I follow, he says, he has this line. I love it. He says, every video you put out online is like a little mini robot that once you turn it on, it never turns off. And it will continue working for you. It will continue answering questions for you. It will continue demonstrating your greatness forever. That's the power of what we're doing here with live video. Wow. That's the power. So I'll hand it back, Don. Come on.
All right. Listen. All right. Jared, I think you have one more person. We're going to turn hand raising off, and I think we have one last question, or do we not?
Yes, we do, Don. Absolutely. So before we go to Sadia, I would love for Amin, who is back on the stage, just to quickly give a quick introduction, and then we're going to have Sadia ask our last question. So Amin, please.
Oh, hi, everyone. Thank you so much for holding this room. I've bought 4 homes in my lifetime, but I never figured out how to pay off the mortgages in such a short time. So I've learned a lot today, and I appreciate it. Thank you.
Awesome. That's so kind of me, I appreciate that. And again, amazing. Check her out. She's amazing stuff in the tech space. But Sadia, thank you so much for coming up. You're our last question for the day. Please let us know what your question is.
Good morning, everyone. Thank you so much for this platform. I actually just got bumped up here and I'm listening. So I'm a listening listener here. And I'll just be listening to that last episode you have.
All right.
All right, cool. So actually, let me do this. I saw there was one more question from a man named Johnson. I think he's still here, so I'm going to invite him up. So Johnson, welcome to Clubhouse. Just go ahead and accept the invite. And there you go. So Johnson, welcome to Clubhouse. Love the tuxedo. Please let us know what your question is. And yep, there you go.
Hello, good day. My question is, I was passing through this mortgage room and I was wondering what's going on, because I've been meaning to ask.
All right, well, we're going to go over an example so you can see a little bit about what we do and how we do it. All right, Jared, are we ready to put this last demonstration on?
Yes, we are. So if you want to see a visual of what Don is walking through, you can click my bio and click my profile picture and read instructions. So what you're going to read on my profile picture is go to your laptop or iPad and type in ice10k.com. That's ICE10k.com. And once you're there, you're going to go to the right-hand side, the second button down. You'll see Clubhouse Simulcast. You'll click that button. You'll see a bunch of different options from Facebook, YouTube, Twitter, and LinkedIn. Choose whatever option you prefer. YouTube is probably the quickest, but all of them work fine. And you'll be able to see Don's pearly whites, Kirk's pearly whites, as well as they put the example up on the screen. So you'll go ahead and go to the laptop or an iPad and log into ice10k.com, follow the instructions on my Abby, and you can see this example live. And just make sure that you turn down the volume on your computer and you just listen in on Clubhouse. All right, Don, let's get this last example underway.
All right. So we also
have... All right, thank you.
You're welcome, sir. You're welcome. So listen, we have one more question on from Facebook user as well. And let's see if we can handle this all at the same time. So could you,
sure.
Let's go ahead and
read
put
it.
that. Okay, go ahead.
Yeah. So we have, it unfortunately doesn't say the name, but so this might be somebody in your Facebook group. So they're asking, I have about 14 years left on my mortgage, owe about $144,000. My principal is now more than my interest. Is it possible to pay my mortgage off in 2 to 3 years? For your information, mortgage is only debt I make in the 90Ks per year in my job, and I have other forms of income, typically 5 to 20K per year.
Okay, let me handle that right now. Okay. It is possible. And not only possible, it is probable. The question becomes, do you want to do that? Let me give you a
Right.
story. All right. Right here in Huntsville, Alabama, I've got a gentleman who is now making more money now. Actually, Kurt, you know him. Making more money now as an engineer than he's ever made in his life. And because of that, um, when he started the program, 5 or 6 years ago, he wasn't making that kind of money. But now he's got $260,000 left on his mortgage. And with that $260,000 left, with all the extra money he's making now, he's going to be able to pay off his loan in 3.5 years. 3.5 years. But he's only going to pay $16,000 in interest. Our program actually shows him how much interest he's going to pay. $16,000 in interest. So I said to him, when he was so excited about how the program was working for him, I tell him, that's great, but you're paying off your loan too fast and you're not paying enough interest. He said, Don, I thought that was the idea, is to pay it off cheap and pay it off. And cheap means you can pay it off fast. Yes, but that's too cheap. Here's what I mean. Let's tell the program. All right, let's tell the program, because I can, like I said on the screen here, I can change the amount of money that we have going to the budget at any time. So what I did was I changed his income and made it $2,000 less per month. And the program recalculated everything. All right. Once the program recalculated everything, it showed him that because our program can tell you, you see this button here, it says interest remaining. This is actually John and Rebecca Jones. I'm going to get to this next. But even with John and Rebecca Jones, I can show how much interest they have remaining to pay. This gentleman only has $16,000 in interest remaining. I said, let's take out $2,000 out of your budget and tell the program you're making $2,000 less. The program recalculated and said, now you're going to be out of debt in 6.5 years to pay off, 6.5 years instead of 3.5, and you're going to pay $20,000 in interest instead of 16. He says, Don, it's going to take me longer to get out of debt, and it's going to cost me more money in interest. Why would I do that? I said, now let's look at the whole picture. To get out of debt in 3.5 years, you have to put that $2,000 back into your budget. When you put that $2,000 back into your budget, that's for 3.5 years. 3 years is 36 months. A half year is another 6 months. That's 42 months. So that's $2,000 a month going back into your budget, going to a debt reduction, $2,000 a month for 48 months. Okay, I'm sorry, 42 months. Okay. So that's 36 months plus another 6 months. That's 42 months. That's $2,000 a month for 42 months. That's $84,000. Remember, he went from 16,000 to 20,000. So to get it back down to 16,000, he has to put that $84,000 in to save an additional $4,000. Remember, I said earlier that the key to getting out of debt is saving on the interest. And this $84,000 at this juncture of the mortgage is only going to save him an additional $4,000. I asked him, is that how you want to spend your money? He said no. He chose. I said, now, why do you want to pay off the house early? He said, because I want to build my new house. I said, you don't have to pay off this house to build the new house. Besides, 3 years from now, everything is just going to be more expensive. Start now. So he says, well, Don, the house we're looking at is going to be about $700,000. We have to come in there with some money down. Okay. And I said, well, you have a lot of equity in the house you have now, right? He says, yeah. I sent him down to our friend downtown at one of the good banks downtown. I sent him to our friend who is she is the vice president of that particular branch. And I said, talk to her. She'll get you a HELOC. Just a few days went by, had the HELOC money, use that as the down payment on this new house. That house is soon to be finished. They're going to move in. And when they started the process, it was a $700,000 house. When they started the process, now it's worth almost 9,000, and they haven't even 900,000, and they haven't even moved in yet. So listen, folks, the extra money he was going to put on that house, well, now he'll be able to put it on this new house and save hundreds of thousands of dollars in interest. And he's going to put a renter into the old house and pay everything off in about 10 years. I saw him in the restaurant the other day. He's what, 6'2" or 3 or something.
It's a big guy, yeah.
Yeah. And I'm 5. I'm 5'4". I'm not ashamed to say, but I project 5'9". I just want you all to know. I project 5'9". I'm 5'4", But anyway, he picked me up in the restaurant and said, "Thank you for that advice, because we got the house now, and it's almost worth $200,000 more because we started the process early." So the answer to your question is, I don't know exactly what to do, but here's what I know. You don't want to spend money on paying off the debt if you only have a little bit of interest left to pay, especially if you're planning on investing in the future. Give us a call. Go to ice10k.com and get a savings report so that we can figure all of this out for you. You want to see the math on this. I could tell you a whole bunch of stuff, but you know what? People lie, but numbers don't lie. That's a clip. Okay, here we go. So watch this. So in the last couple of minutes here, I just want to show what it means to understand sinking funds. There's a way of looking at our money to what's called sinking funds, and there are some popular people on YouTube right now that talk about sinking funds, SINKING, sinking funds. And a sinking fund is something that works like this. We're putting away a few extra dollars a month just in case something breaks at the house. We're putting away a few extra dollars a month to get ready for our vacation. We want to save it up so we can do it with cash. Okay. And if we do that, then we can use cash instead of putting it on our credit card. That's a sinking fund. All right. Let me show you what happens when you have a sinking fund. Let's say all of your sinking funds add up to putting money away. All right. Add up to, let's say, $200 a month. Now with John and Rebecca Jones here, all right, they're going to be saving. Here's their accounts. We're going to do this very quickly in the last couple of minutes here. John and Rebecca Jones, they have on their accounts, they have $500 in checking. They got $5,000 in savings. They got a $25,000 auto loan. They have a $2,000 on their Visa and a $200,000 mortgage at 6%. The program has already told them that they're going to save $179,364.36 in the upper right-hand corner here. That's how much interest they're going to save. Because they're saving that interest, they'll be able to pay off their debt in 7.7 years. Now, if they told the program, I'm going to put, now, because you have to fill out a budget, right? Let's say they have sinking funds that add up to $200 a month, putting money away just in case something happens. Okay. So we're going to tell our program, we're going to go back and tell our program that we want to spend an extra $200 a month, and we're just going to put it here in unitemized budget. Okay. Unitemized budget is already at $1,300 a month, and they're going to be able to get out of debt in 7.7 years. Now, this sinking fund money is going to be sitting in the bank, making 1/10%. Remember, a sinking fund is putting monies away. If you want to go ahead and Google it or go to YouTube and search it out and see what sinking funds are all about and see how expensive they are to manage. We're going to tell this program, I want to take another $200 out of the budget. So that's a total of $1,500. Okay. So we're saying we're going to put $200 away for sinking funds. Watch your 7.7 years. Watch your $179,000 here when we tell the program that. 8.4 years and $173,000 in our potential interest savings. The interest savings went down, and now it's going to take us 8.4 years because we want to take an additional $200 out of our budget a month just to put it in sinking funds, just to be able to have something just in case something breaks. Folks, this is what I'm saying. Cash is not king. It would be cheaper for them to take that money. Okay, let me show you something here. We're going to take this, we're going to put it back the way it was. Okay, put this back the way it was. That was that $300. This $1,300 that they're spending each month on their bills. Do this. Look at it. Now it's 7.7 years. It would be cheaper for them to take that money and put it on the debt. Let me show you just something when I show you why this is such a bad idea. I'm going to click on how this loan breaks down here. This $200,000 mortgage. Okay. Do you see this? $199.10 going to principal, $1,000 going to interest. And if you can't see that good, let me see if I can make that a little bigger. There you go. Blow that up. $199.10 going to principal, $1,000 going to interest. Every single month, they take $200 out of their budget. That means that's $200 we can't put towards the debt. And $200 here. I wonder if somebody can actually help me to figure it out. Kurt, if I prepay this $200, how much interest do I save?
$1,000.
$1,000. Why would I put $200 away in a bank to sit there just in case something breaks? When I could take that $200 and place it on this mortgage and save me $1,000 each time. Sinking funds are not thinking funds. I will repeat that. Sinking funds are not thinking funds, and I'll challenge that any day of the week, that using a credit card is much better for you to take care of these things if you make sure that we're going to make sure you have the cash available. Because see, here's the thing. John and Rebecca Jones already have. We're going to show you here. Okay, we're going to go into our budget, then we're going to go into settings as soon as the thing refreshes. And I'm going to show you something here. Let's go to preferences. Okay, instead of trying to take out $200 a month, John and Rebecca Jones have told the program, we're just going to keep $4,700 in savings at all times. $4,700 in savings, just in case something goes wrong. Now, what I'm going to do in this case, if I have something goes wrong, I'm going to put it on my cash back or my miles credit card when something goes wrong at my house. I put it on the card. All right. I get the points. I get the cash back. And then if I do it right, I can use the bank's money for 30 to 45 days interest free. And I can use my little money over here that I have in savings to pay the card back. Then I build that back. I just build this back up. But I don't tell the program I'm going to take out $200 a month out of my budget forever and pay thousands of dollars in interest on my mortgage that I don't need to pay. Folks, the old system is antiquated. It has worked for a long time, but there's a new sheriff in town. It's called the P.I.L.L method, and we're going to save you hundreds of thousands of dollars more in interest than any other program out there, more than the debt snowball, more than the avalanche method, and certainly more than the sinking fund method, because sinking funds are certainly not thinking funds. Jared, I'm through for the day. What do you got for me?
All right. So hopefully everybody enjoyed today's session. So wherever you are, if you're on Facebook, make sure that you like, share, comment, And what's the other one, Don? Am I leaving something out?
Yeah, like you want to
Subscribe.
subscribe. You want
Subscribe.
to
There you go.
you want to subscribe and share. Or I don't know. I forget. Like, share, and subscribe. Like, share, subscribe. That's it. Like,
There you
Like,
go.
share,
listen,
subscribe.
listen. I'm new to all of this thing. You know. I listen, folks. I'm going to tell you, in case you didn't know. All right. Next year, I will be 67 years old. So all this new tech stuff. I'm trying to do my best to learn it.
You're doing great, brother.
All right. So listen. So Jared, that's why you guys are here, to do all this tech stuff. I just bring you guys on, and you do what you do, and we'll bring on Kurt to do what he does, and hopefully,
It's a team effort.
It's a team effort,
Absolutely.
man. It's a team effort. So listen, thank you so very much, everybody, for helping us out. So Kurt, Jared, take us out.
All right, cool. So yeah, we just recently started simulcasting this on Facebook, Twitter, LinkedIn, and YouTube. I believe we're also streaming on Twitch. We also are streaming on Wisdom. So we are branching out to so many other platforms. So when it comes to these platforms, if you want to be connected with Don, go to ice10k.com, or if you're in Clubhouse, click the link above. Go to Clubhouse Simulcast, the second button down to the right. And I want you to like, subscribe, and share these pages to your network. So go ahead and follow him on LinkedIn, follow him on YouTube, follow him on Twitter, and follow him on Facebook. He'll have content on all of those different platforms outside of Clubhouse. But if you're in Clubhouse, make sure you click on his face, click follow, click the always on notification. So when he hops on a stage, you're alerted. Also, make sure that you click the greenhouse at the top if you're in Clubhouse, and follow the club. And there's an add members button option as well. Feel free to click that add members and go ahead and add everybody in your network that has any sort of interest. And that's everybody, right? And last but not least, I'd like to go ahead and go through an outro for all the mods who spent their time on a Black Friday to support the room. But before I do, I would love for Don just one last time to let people know how can they get in touch with your team, and also tell them a little bit about your book.
ICE10K.com, right at the top of the screen there, folks. ICE stands for Interest Cancellation Expert. ICE, the number 10, the letter K.com. On that digital card, when it comes up, you will be able to see a button that says Get a Savings and Earnings Report. Once you get the savings, put in your financial information. Somebody from my staff will confirm that information with you by phone, and then set up a consultation. And our consultation is only $150. You know, our average interest savings is $150,000 per client. And our consultation is just $150. So it's $150 is the best money that you're ever going to spend. So folks, listen, go ahead and get that information. So now to get the book, now we've got something special for Black Friday about the book, folks. Let's put that book up there. So now here's the thing. When you get the book, you will be able to get a 10K card. So I know Kenyatta is doing double duty. Kenyatta, are you in the house right about now?
I am.
Will you tell them how they can get their 10K card, please, once they get the book?
Yes, certainly. So you guys, that same ICE 10K card that you can use to access the simulcast, you can go and also uplink your screenshot of your receipt. You want to go to I'm Ready, click that link and build out your card to your specifications. You want to put out all your social media outlets. You want to put in your websites and email addresses and anything else you want everybody to know. Designate a place for this to be sent to, and voila, you'll have a 10K card value at $100.
All right, folks. So once you do that, the next thing we're talking about is for our Black Friday special. Once you receive your book, please take a picture, then upload it to your social media and tag P.I.L.L Method, and we will send you an additional book signed by me. So it's a 2-for-1. Buy one book and get a second one signed by me. And all you have to do is upload a picture of you in the book, tag us at the P.I.L.L Method, and then receive an additional book for free. Thank you so very much. Jared, back to you, sir.
All right. So I just would love for all the moderators to give a quick, 30-second outro. And, just remember, some of the folks are on Facebook, YouTube, LinkedIn, and Twitter. So go ahead and give them a call to action. Let them know where they can reach you. So my name is Jared Albritton. My goal is to increase diversity in tech through social audio and social, platforms. So you can connect with me at jarrett10k.com. That's JARRETT10k.com. All my socials are there. And if you're on Clubhouse and you want to see what kind of content I do, just go to my bio, scroll down, you'll see a ton of replays. And if you want to be live in those rooms in the future, feel free to give me a follow. That being said, I'm going to pass it to Kenyatta.
Thank you, Jared. Listen, Don's offer is going to be a big, big deal. You want his autograph now because I'm telling you, he's going to be like big, big, big. So you want to be able to get some money, thousands and thousands of dollars for an autograph copy. Okay. So my name is Kenyatta. You can find me at Kenyatta10K on, and that'll send you to all of my outlets, Instagram, Facebook, YouTube, and etc. And yes, it's been a pleasure to serve you. It's been a pleasure to spend time with you. We appreciate your presence and pray that we earn the privilege of your time. And yes, connect with me if you need any funding for your deals, especially if you are someone that's out of the country looking to invest here in US. If you have a business and you need business purpose funding, reach out, and I'm here to connect with you and grow with you.
All right. 10K cards, are you in the building? All right. So YCEO, please give a quick outro for the folks on Wisdom.
Hi, everybody. Thank you so much for joining us in the room on this Black Friday. There's almost 60 of you here. Thank you for your sacrifice in being here. I'm Tiffany, the YCEO. I can be reached at yceo10k.com. I've been helping people for over a decade, and my mission is simple: to help you become the person you want to be, whether that means you want to be more successful in your career, your business, have healthier relationships with friends and family, or simply just be happier every day, just like me. So what I'll tell you is meet me over at the yceo10k.com and connect with me. We'll be starting our free classes here very, very soon. And we've got some certified psychologists that will also be tapping into our network, and our list of speakers is growing, and we're really excited about what's going on at the YCEO network. So tap into me, Tiffany. I'm at yceo10k.com.
Awesome. So up next is the man that helped us get the simulcast moving. So Kirk, please let everybody know about what you do and how they can get in touch with you.
Absolutely. Thank you so much, Jared. And again, thank you, Don, man. What a room, what a time we have spent together today. One of the things I always say to folks is you have to allocate time in your month to personal development, personal and professional development. And what you have done for the past 2 hours is really just invest in you and the information that you are going to receive here. I think Giuseppe said this earlier. It's not about just having the information. It's what action will you take? I love the way that was shared. Absolutely a mic drop moment right there. Several of them throughout the 2 hours we've spent together. My name is Kirk Nugent, also known as the Geek Speaker Preacher, and I believe that live streaming can not only help you grow and engage an audience, but it can help you funnel clients to your business and establish you as a thought leader. One of the things I have coming up like right now, like within the next 50 minutes, is an Amazon live stream where we'll be talking about 30 plus deals, Black Friday deals that you can use in your home studio. If you like what you see on screen, both in my studio and in Don's studio, I know that our folks on Clubhouse cannot see this, but if you have even peeked in on any of the other broadcasts or any of the previous live streams, you've caught the replay, then you are going to see what we have set up. And some of those things are on sale today. If that's an investment you're looking to make, then you want to come hang out with me. A lot of brands have sent me some gear. I've got boxes on the other side of my camera right now. I'll be showing some of those. We're doing some live unboxings. There'll be a giveaway, a lot of things happening. kirkrnugent.live/10K. All of my stuff is there. kirkrnugent.live/10K. All of my links are there. We'd love to see you in the comments. Thank you so much.
Now, Kurt, you know I'm coming. You just spoke
Come
my
on.
my love language, which is technology. I got to come over there so I can shop. Oh,
Come
I
on.
can't I
Come
can't
on.
stand it. It's Black Friday. I need eCam. I need a lot of stuff.
Let's do it.
Awesome. So yeah, make sure you tap in with Kirk and take advantage of an amazing opportunity to build up your platform. So up next, I want Giuseppe. Please let everybody know on Clubhouse as well as out on YouTube, Twitter, Facebook, and LinkedIn a little bit about yourself and how they can connect with you. Giuseppe, you around? All right, Giuseppe might have stepped away, but Amin, please let everybody know a little bit about yourself and how they can connect with you on your other social media platforms.
Sure. So I started my career off in engineering, and I did that for about 12 years, and I recently transitioned over to big tech. I interviewed with companies like Apple, Google, Facebook, Amazon, Twitter, LinkedIn, as well as PayPal, and a startup called Insure. So I'm really passionate about people of color having that financial freedom. Tech is one of the routes you can do that, as well as real estate. So rooms like this are very important, not just being able to purchase your own home, but figuring out the game the way everyone has explained here today and paying down your mortgage faster. I believe that that's another great route for generational wealth. So I hope you all took a lot of notes here. I can be reached on LinkedIn, here as well on Clubhouse. I'll be doing a room later about being on Clubhouse for a year. And I hope that you take all of the notes that you got from today and then also try to make as much income as you can as possible so that you can have that luxury of paying down your mortgage in 7 years. So reach me on those platforms. Happy to be here today. And I learned a lot myself. Thank you so much.
Happy Clubhouse anniversary.
Thank you.
All right, all right. So
That's good.
with that being said, we're gonna go ahead and close the room out. But Don, any last words before we count it down?
Well, listen, folks, I just want to be able to say thank you so very much for being here with us today. Take advantage of the Black Friday sale, get the book, and then upload your picture of you and the book to your favorite social media and tag the Pill Method, and then get a second book for free signed by me. We're looking forward to seeing you back here again Sunday morning at 8:30 a.m. Is that the correct time? 8:30 a.m. Central Time and
Yep.
9:30 a.m. Eastern Time. We're going to be
All right,
right
Jared's
back
gonna be
here.
up at 1 o'clock in the morning in a minute.
All right. So listen, we just need all of you to share this information. All right. You want to make sure that you're liking, you're subscribing, and you're sharing this content with your friends because nowhere else on the internet, nowhere else on the planet does this information exist. Help them to get it out, and help us to get it out to family and friends and to your entire network. We would appreciate that so very much. So we're looking forward to seeing you again. And know this, folks, it's not how fast you pay off your debt that matters. It's how cheaply you can pay off your debt. Not pay it off fast, but pay it off cheap by optimizing your interest savings. And that's what has us excited. Cut your interest costs by up to 75%. Take that money and invest it and turn it into generational wealth. Thank you so very much for being with us today. My name is Don Daniel, or ICE. And go to my card is ice10k.com, and we will love to see your face in the place here Sunday morning.
All right. Yes, Sunday morning, 9:30 a.m. Eastern time. Definitely be here, get in early, and invite some friends. Click the greenhouse at the top if you haven't already. Make sure you're following some replays from previous rooms. Feel free to share that. You can go ahead and actually text that to friends and family and spread the Pill Method message from this room. And if you just got in, you can check out the replay from earlier if you'd like. So share all platforms, like, subscribe. Let's get this information out so that there's less people blind to what the banks are doing from an interest cost perspective, and they can empower themselves to take advantage of all the opportunities you can get with these banks without it costing you 75% more in interest cost. All right, great. So we're going to go ahead and close the room out.
Kurt Nugent is going to do our outro for us. Then
Okay,
then
Kurt,
you can
go
count
for
us
it.
down.